Good afternoon, traders, and welcome to the London Forex Broadsheet's weekend wrap of the markets. The euro reached its highest level since April 23rd as traders bought oil and sold stocks during the New York session. Also helping the euro was news that Germany's wholesale prices in June rose 0.9% from May and increased 8.9% from a year earlier, according to the Federal Statistics Office. The trend for wholesale prices has been in an upwards trajectory recently. In April, the change was 6.9%. In May, wholesale prices increased 8.1%. Inflation is showing itself in these numbers. The question will be, can the consumer keep up? The 4-hour euro chart shows that the long side is favored, heading towards all-time highs not on the back of euro region strength, but more on the bolt to safety from the oil markets and global tensions. 1.5690 now offers good support, and 1.6070 is the resistance. The pound strengthened dramatically against the dollar in trade on Friday. This was not as a consequence of UK expansion, but in light of dollar weakness as oil moved higher. The explosion through the 100-day simple moving average at 1.9800 drew in momentum. The pair is technically in no man's land. We will have to wait another 24 hours to see if it can hold the trend. The 4-hour chart offers huge upside resistance in the $2 area. It is easy to see the short side trade from 1.9840 to 9800. The Aussie made another attempt at the 9700 area. The pair used the 20 and 50-day simple moving average areas as support to launch higher from. We are still favoring the long side of things, but remember that this pair does not hang around too long waiting for a few more pips. The RSI remains above the 50% neutral line, and the pair remains above all the daily SMAs. The loonie moved 110 pips in trade on Friday and then closed at the open price. It is caught now in between the daily chart SMA areas. The 4-hour chart shows that the pair has just hit support. Breaking lower may be a hard-fought move. A contrarian long play may be seen during the coming week. The Swissy dropped over 100 points in trade on Friday as the U.S. Treasury market dropped the yields paid on government debt, forcing this pair lower. It has not hit support, and we may see a technical long relief rally. Still in short mode, this pair follows the Treasury yields lower, and that is being pushed down by the negative equity markets. On the yen, we can still see a bullish formation on the pair, and in the face of brutal equity selling, it has still held higher, a sign that we need to move to the long side of this if equities move higher. The RSI indicator remains above the 50% neutral line. The pair is once again testing the 20 and the 200-day simple moving averages. A break of 107.50 looks to be a key move for this to hold. The economic calendar for Sunday is clear. Monday starts off a huge week of data that will light a fire under the global markets. UK producer price index numbers and the Reserve Bank of Australia are key releases for Monday. In Asian equities, Friday's trade was initially boosted by the positive finish in U.S. equity markets on Thursday, and that helped to push most Asian stocks higher, snapping a 4-week losing run. The Nikkei 225 did finish 0.2% lower, although the MSCI Asia Pacific Index rose 0.4%. 9 months ago, the Nikkei stood at 17,980. That is 4,000 points away from where we are right now. In European stocks, traders looked at the situation differently and finished the week by sending the Dow Jones Stock 600 index to a 3-year low, and all national indexes except Norway finished lower. Stocks in Europe extended declines during the trading day. The German DAX ended the session off by 2.1%, which is 4 times the daily average. On Wall Street, U.S. stocks lost ground for the 4th consecutive week, and for the 6th time in the last 8, but did finish more than 1% above session lows. It would seem that the bulls and bears have turned into rabbits and hares, and looking at the XLF, the Financial Sector Exchange Traded Fund, on a yearly basis we can see that the path of least resistance is lower. Actually, this is less like a path and more like an Olympic ski run. The market overviews posted 3 times a day will direct you on how the financial sector is holding up, and when and why the breaks of support and resistance are coming. Overall, on Friday, fear again came into the markets on several fronts, which caused the dollar to fall against a basket of most widely traded currencies. Oil rose over $5 during this session after the Jerusalem press said Israeli warplanes practiced over Iraq, which served to renew concerns regarding an Iranian attack. News over oil worsened after a Brazilian union said it plans a 5-day strike and Nigerian militants pledged to renew attacks on oil facilities. Further stress concerning the GCEs at the beginning of the New York session spurred a further round of dollar selling. Government-sponsored entities? Wait a minute, that sounds like yesterday's news. Crude oil for August delivery rose $3.38 or 2.4% to $145.03 a barrel. This was on growing concern about violence in the Middle East. Gold futures for August delivery climbed $18.60 or 2% to $960 an ounce. This is the highest since March, as record energy costs and slumping equities spurred demand for the metal as a safe haven.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.